Good afternoon. This is Chris Brecher with the Simpler Stocks Free video for April 6, 2016. It's 3:27 p.m., about 33 minutes before the bell. Just so you know, right now what we have is the futures down 16, NASDAQ down 26, Russell down 10. Bonds up a lot, almost 2 points. You have gold up marginally, up $11. Key in here is the Nikkei, down 465. Exactly what I talked about on the free and premium videos the last 3 days. And we have the Russell right at support. So what's all this mean? Let me show you what we're talking about in here. We've been talking about for days about the ESs and forming on a daily right here. Is right here forming a giant divergence with the Nikkei. Usually they move together. And usually the Nikkei moves before the ESs. And as you see on here, what we've been talking about is that the Nikkei that looked like it might kick in here and play catch up instead fell apart. And when it gets to the point of no return, what do I mean by that? Back here when it starts to sell off, you think, well, it could still turn around. The longer it goes down, all of a sudden this doesn't look like a Stewie pattern anymore. What do we mean by a Stewie? Inverse head and shoulders where you draw like this. Now I highlight it, and as you see in here, let me do it again. You highlight it in here, and it looks like Stewie. That's why we call it a Stewie pattern. But as you see in here, it fell apart. Now that it's down to almost this area, 15,500, you have the ESs almost at an all-time high, and you have the Nikkei almost at an October 2014 low. So if you put this on a weekly, it becomes even more dramatic. And let me show you what I'm talking about. Check this out in here. Right here, boom, right in this area, October 2014. What do you have on the ESs? Up here near the 2134, the all-time high. Very dangerous situation. It's about, let's say, 90 points from an all-time high. What's the other dangerous? Way overbought. Every time it's overbought, it has a nice reaction. Every time it's oversold, it bounces. So right now, the problem is the ESs are still above every moving average. But at least you see what we're looking at when it comes to negative divergences. The other thing we're watching in here is the ESs, like I said, on a daily, and the high yield bonds, which keep going down every day. And this becomes a big divergence too. Now, what I want you to see on here, and I'm going to expand it, is the ESs on the left just kept going up, and so did the HYG until about a week ago. And the high yield bonds slowly started going down while this kept going up. Now what happens is you have this same thing about a point of no return. What do I mean by that? You have to watch right here about this being a head and shoulders, and if this breaks, that's another negative divergence for the ESs. Now, why the HYG? That's the high yield bonds. Now, there's two things to realize in this. One is there are a lot of oil companies that compose the high yield bonds. Two is this is usually a sign of if there's an internal problems in the economy. So when it went straight down back here, people are very worried and the ESs fell apart. The other thing to notice in here is what holds a lot of these high yield bonds? The banks. And I want you to see Citigroup on the left and how similar the chart looks to the HYG. So what happens is if the HYG breaks down, Citigroup and others like other banks like it will break down, which will also hurt the ESs. Now, amazingly, I'm not even talking about Pfizer Allergan yet. Just so you know, I've been doing it 34 years. I was around when United Airlines was getting taken over by the pilots union in 1989, and it fell apart. The market basically collapsed that day and the next day, and that was the bottom there. But there was when that collapsed, the market got nailed. Why? Because every ARB was long UAL, and they really lost a lot of money. A lot of banks lost money, and so on. This time what we have is that the Treasury is thinking of limiting inversions even more. You had Allergan fall apart, a lot of ARBs getting really hurt. These are people that are long Allergan and short Pfizer. That's why this morning in the premium chat, we were trying to buy Pfizer. Unfortunately, I got panicked out right there. But on the other hand, right there. But I didn't lose money. I lost $4. So, I could have gotten back in. We were way too busy. I didn't have time to get back in, which is a shame. You see that right there? It was just a good trade to get it back on the way up. So, you would have made at least 50 cents. Whole idea is this falling apart, only having the ESs down 17 is a miracle in my book. The other thing in here is BHI, Halliburton. Looks like the Justice Department is blocking this merger also. Unbelievable that two mergers are falling apart and the ESs are only down 17. What's the biggest reason for this? Well, there are two of them. Number one, bonds. Here we go again. Bonds going straight up means yields go down, which means there's nowhere else to put your money but the stock market. That's number one. Number two, go to StockTwits. I know I talk about this all the time. And you look and you see the SPY, and I'm going to show you in here. That's me in here. Sorry you have to see my face. Put in SPY, put in sentiment, and you'll see 63% bearish. There's way too many bears out there, and that's why the market hasn't completely fell apart. Now, do I think it might later? Sure. But right now we're seeing the divergences, and like you see back here, divergences can take months to develop. What do I mean by that? Look at the ESs on the left. Look at the transports on the right. Now I'm going to take off the indexes so you get a bigger chart. Look at the transports on the right. The transports last year went down for months. They were down in actually the beginning of 2015. Just kept going down and down. It was finally this one, the big breakdown, that all of a sudden the ESs cared about it. That over here, it just took months to develop. That's why in the Simpler Stocks Premium side, I'm showing stocks that are already rolling over. And we've done pretty well with some of those stocks. Just so you know, one thing I've been teaching is about sentiment and using the StockTwits sentiment. And we did something pretty humorous that I actually did a blog post about when too many people are bullish in a stock, it's a great time to short it. If you get a chance, go to simpleroptions.com/blog and you'll see my post in there. It's very humorous. So like you know, we have a $7 trial for 30 days. If you didn't know, this includes a lot of things. Number one, it includes using unusual option activity webinar. Basically, I've traded options for 34 years, was in the pit and the CBOE for 8, and one of my specialties was trading takeover stocks. So I love using unusual option activity, and I post about it all the time. That's number one. The other thing you get in here is you get charts. We have a chat that's a forum that's very active all day. Most people know I usually answer emails within an hour. I don't know how I've kept up, because when I promised that, we had about 50 subscribers, and now we've just exploded on the amount of subscribers. But I still do it. It's just a lot of work. I love doing it, but I always respond. Same with the forum. If you go in there, we have a tremendous amount of forum posts, a very active community. The other thing, we have the live chat in the morning, which this week we're actually going to do from 9 a.m. to 10 a.m. Eastern, just so you get a little bit of the trading. This is what it looks like, our thing. We have charts, premium videos, which you get, the chat room, the forum. Then we have these meetups, and that's the thing we have tomorrow night where I talk about options. So I hope you have a chance to take advantage of the $7 trial. It's basically, you get 30 days, and like you see on here, let me show you the actual trial. Make it easy for you. I love visual. $7, 30 days. And I'm telling you, it's basically, we've had at least 2,000 people take us up on it. So I hope you enjoy the video. I will be with you tomorrow. Have a great night.